Sean, let's bring on our next guest for the second part of our Election 2025 show for the campaign for this Friday. And that's Joseph Steinberg from the University of Toronto. He's an associate professor in the Department of Economics. We're just going to get him onto the screen momentarily. And as we do that, Sean, what are the types of questions, that are top of mind for you in terms of economics as we begin to think about, the midpoint of this campaign? As you've mentioned to me in the past, the parties, especially the Conservatives, have been out there with some big economic announcements, big tax expenditures. How much room is there left in the remainder of this campaign to actually get into economic fundamentals when these big campaign pledges are already out the door?
Yeah, in a world of a significant federal deficit already, one that's likely to deteriorate over the coming weeks and months, the different parties have made pretty significant commitments when it comes to spending and tax cuts, Roger, that is no doubt going to worsen the deficit. But one of the biggest challenges here, of course, is the degree of economic uncertainty that's hanging over the country. That has fiscal implications. It has implications for household spending, employment, and so on. And so we're so fortunate to have Joseph with us, one of the country's leading scholars on trade policy, who these days I think is feeling pretty frustrated because the Trump administration is acting, in conflict with theory and practice and everything else when it comes to the radical trade policy announcement we saw this week. And so I think being able to have him help us understand the economic effects on the world and of course Canada is a crucial backdrop to this election campaign.
Sure. Let's go to Joseph now. We've got him on the show. Well, Joseph, I want to start with Larry Summers' reaction to yesterday's, Wednesday's trade announcements, reciprocal tariffs from the president. Larry Summers, former senior Obama official, said, quote, "This is to economics what creationism is to biology." Do you agree?
I do agree. It's wild. It's much bigger and much worse than I think pretty much every economist out there who's been analyzing this was expecting. Larry Summers, he's not the only one who has reacted this way.
Sean, jump in.
And yeah, well, just why don't you just elaborate on that point, Joseph? The administration has made the argument that there's something fundamentally unbalanced about the global trading system and America's relationship to countries around the world. I think there was some sympathy for that argument in certain cases, but instead of pursuing, for instance, changes in the relationship with China, it's decided to essentially set out in the name of trade wars with virtually every country in the world. Why don't you just talk a bit about the consequences of such an approach?
Yeah, so there's lots that can be said about the justification, but I think in terms of the consequences, look, I think the easiest way to, foresee what the consequences are going to be is to look at what the reaction of, stock markets has been so far. I mean, we're seeing precipitous declines, unprecedented within the last, decade or so, even more, going all the way back until the Great Recession, all across the U.S. Equities markets. This is to some degree spilling over around the world as well. But the concentration of this reaction, to U.S. equities is telling us that this is really going to drag down the U.S. economy a lot. Wednesday night, I frantically put this scenario into my model. I got some results out of it. Look, it doesn't look good. There's going to be a very pronounced short-run decline in the U.S. economy. There's no way that if these tariffs stay in place, that the U.S. economy won't go into recession shortly. To some degree, that will drag down the rest of the world economy. Canada, of course, we're very exposed to the U.S. economy. There's a good chance that we'll be dragged down with the U.S. to some degree. But I think it is important to emphasize that unlike all of the announcements that we've had so far about tariffs against Canada and Mexico, where the pain was really going to be concentrated here at home in Canada, this latest announcement really does indicate economic harm that is centered around the U.S. economy itself.
Yeah. Joseph, we've seen big sell-offs in oil, which is interesting. So really significant drops in Brent and WTI. And we're also seeing those drops not just, in the short end contracts, but contracts out 8 to 12 or so months. Is that again predicting at least a heightened risk for a global recession? That if commodity prices are now reacting to the fact that these tariffs are eliciting a large-scale counter-response by the world's other economic superpower, China, that we are into something much bigger than we even thought we were into as of Wednesday night?
I think there's the potential for that, but certainly I think the decline in oil prices is indicative of expectations that the U.S. economy itself is definitely going to go into a pretty big recession this year, and that alone is going to drag down global demand for oil substantially. But as you said, there is a potential for this to spill over around the world. That said, I think it's also indicative to look at the behavior of the U.S. dollar in just the last couple of days. We've seen a substantial weakening of the U.S. dollar since late Wednesday night. And it's, to some people, that has been surprising in that tariffs raise prices. And kind of the standard economic intuition for what should happen is that should cause the U.S. dollar to appreciate. We've seen the opposite. What's that telling us? That's telling us that expectations are that the U.S. economy is going to substantially weaken relative to other economies around the world.
Yeah, bond
And
bond
that
yields have
weakening is going to
declined.
drag down the dollar even further than the tariffs are going to, increase prices.
Yeah. Sean, over to you.
Yeah, well, Joseph, you've been a critic of that in a way that has distinguished you from a lot of voices in the public policy debate over the past several weeks, in the sense that you have been skeptical of the use of retaliatory tariffs. In the past day or so, Prime Minister Carney announced that his government will impose retaliatory tariffs in response to the Trump administration's tariffs on the auto sector. Why don't you just reflect on that particular announcement, and more broadly what you think the Canadian government should be doing in response to the administration's announcement?
Yeah, I think this latest announcement of an additional salvo of retaliatory tariffs against the U.S. is, as I've been saying throughout the last couple of months, misguided. It's not surprising to hear me say that, perhaps. I think it's misguided, not only because President Trump didn't actually put any additional tariffs on Canada on Wednesday. We were one of the few countries around the world to essentially receive an exemption from this reciprocal tariff plan, at least for now. And so I see very little, economic gain from retaliating against that kind of that announcement, which kind of largely preserved the status quo over the last few months. As a cynic, would probably look at this and say this is primarily a diplomatic strategy aimed at the domestic election. But, I'm not a politician, so that's not my area of expertise. I look at this and I say, putting tariffs on cars coming across the border into Canada from the United States, that's a tax on Canadian consumers. The Canadian government has been going south of the border, paying for advertisements, billboards all across the United States, highlighting that tariffs levied by President Trump are a tax on American consumers. So what are Canadian tariffs on American products? They're taxes on Canadian consumers. You can't escape that logic. The logic is correct when we highlight that President Trump's tariffs are taxes on Americans. We have to, accept that logic works the other way around. Retaliatory tariffs are, there's no denying it, a tax on Canadian consumers, and it's going to make stuff that we as Canadians buy more expensive.
Yeah. Final question, Joseph. A lot of people worried that what we're seeing when we shift through all this data, the last 72 hours, and it was even there maybe before, is the risk of stagflation, that we will have an economic contraction, possibly a global one, as a result of the tariffs. And I can't understate for listeners and viewers how important the Chinese countervailing duties are at 34%. This is China picking up the gauntlet that Trump threw down and putting it on, and punching the Americans in the face. And the Chinese, they're not a democracy. They don't face internal pressure as much as the Americans do, and I think it'll be hard for them to back down, having picked up that gauntlet and done what they've done. So, what's the concern here, possibly for Canada too, Joseph? In the Bank of Canada, we've seen a recent uptick in inflation. You would think we've just launched a global trade war that could stimulate more inflationary pressure in the economy, limiting the bank's options on interest rates, and yet, we live in an export-led economy. We are going to be very exposed to the global turmoil that's coming down the pipe.
Yeah, I agree with that. I mean, there's absolutely the prospect for stagflation, especially in the United States. I think all indicators are pointing to a stagflationary period in the United States of economic decline and rising prices. For me, the biggest worry for how that's going to play out for Canada is that I see inflationary pressure coming from our exposure to American products. Canadian manufacturers use imported inputs from Canada, from the United States. Canadian consumers buy a lot of manufactured products from the United States. As many people know, Canada actually has a trade deficit with the United States, not a trade surplus when we exclude oil. So we actually we import a lot of finished products and also intermediate inputs from the United States. And as those things that the United States are producing get more and more expensive as a result of President Trump's tariffs, the cost of production in the United States is going to go up. I do worry that there's a good chance that could spill over into Canada and put upward pressure on our prices.
Yeah, well said. Well, Joseph, we're just so fortunate to have you writing and commenting here at the Hub. You're one of the clearer practitioners of the dismal science, and we enjoy all of your input and analysis, don't we, Sean?
Yeah, indeed. It's been great to be able to draw on Joseph's expertise. One of the most extraordinary things about this election campaign, of course, Roger, is that we're having this external crisis induced by the Trump administration in the middle of it, and being able to draw on people like Joseph to understand what is increasingly the crucial issue at the backdrop of the campaign has been something that we've appreciated, and I no doubt our audience has as well.
Great. Well, Joseph, we'll get you back on soon. In the meantime, have a great rest of your day.
It's great speaking with you guys as always.